Hello traders, and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be going through a particular trade that I managed to capture on gold just this week. We're going to be going through my entire thought process. I'm going to be especially focusing on the mitigation because it was a very interesting one. So we're going to be going through some pictures first, which I shared with the community. Many traders in my community actually took advantage of this. This POI was shared with them in the weekly outlook video that we do every single week. So if you want to be part of that, if you want to gain access to a community of traders that are applying the very same information and trying to execute trades and be profitable, and you want to also have access to a structured course material with over 30 weeks of weekly outlook recorded material, then visit the link in the description below and you will gain access to that. But once again, this video is going to be very straightforward. This was a very massive trade that I executed over here at the ski level, which ended up dropping for over 300 pips in the span of a couple of hours, really. So we're going to be going into the very in-depth approach, talking about the timing, the mitigation, the structure, the analysis, everything in between is going to be covered in this video. So I think it's going to be a very useful one. Now, with all that being said, what we're going to do first is actually jump into the screenshots that were shared with the community. And after that, we're going to be going through the mitigation, zooming into the lower time frame, doing a little bit of practice in terms of reading. So I think it's going to be, once again, extremely helpful for everybody. Now, with all that being said, guys, if this sounds like something you want to learn today, make sure you stick to the entire video and watch it till the very end, because you're going to be learning a lot and gaining lots of value from this one. So let's get started with today's lesson. All right, everybody. So here we are, guys. As we said before, we're going to be going through some screenshots first, and then we're going to be getting into the mitigation. So this over here is a screenshot that I posted on my Instagram. If you actually go through and look at the link in the description below, you will find my Instagram, and you can see the date on where this was posted, right? This is an MT5 screenshot. This is gold on the 4-hour time frame. So this is essentially my bias for gold, right? As price was still over here once again, I was expecting that as we trade into these key levels, which I then refined in my trading view, there was a very high probability that we would see a move down. Once again, ideally, you wanted to retest this demand at 1712. However, when you measure your range, right, this over here till down over there, that is over a 500 pip range. So it is very difficult to be able to hold a position with decent size for that long. So obviously, even though this is a massive range, you're not going to be holding from here till here full volume expecting that it's just going to continue drop, right? This would be sort of the end result of the analysis. You do have a breaker on this section as well, so that would be an area to pay attention to. This one, this demand that builds up on the way, also very interesting to potentially watch as we start and drop, right? So once again, that is a screenshot that I did post on my Instagram. You can see the date. I was expecting that this block of orders would turn price bearish, whether that was over here at the open or at the origin of that block. You would see probably price moving lower, being delivered lower. So that is the very first screenshot. It is very simple, and now we're going to be jumping into more details on the trade. So once again, very same idea. This is something that I shared with my community, just giving them a heads up. As you can see, this is the live market on the right, not a backtesting screenshot whatsoever. And I was essentially having those key levels, expecting that once again, as price trades into them, we're going to see a drop. Probably once again, you have a breaker over here. You have a demand zone over there. So those were various areas to be watching out for. Moving even further, This is when we first got the initial tap. And this is now me zooming into the lower time frame, right? Because this is what you have to do, right? As price trades into your area, as we can see from this segment over here, with the imbalance to the right, we know that this is a high probability area where price is likely to turn. So once that has been achieved, once the price has reached the area of interest, you want to be zooming into a lower time frame, and you want to be monitoring order flow, right? Just like I explained in the previous video of supply and demand mitigations. So price traded into the area, and now we're watching, and what do we want to see? We want to see order flow breaking, right? We have a break over here, a possible break to be monitoring. You can see that I've predetermined the arrow there to signify me that as long as that price is respecting that low, there is no business in me going short, right? I want to see that order flow break, because once again, that's going to signify me that the algorithm is switching from buy-in, because as price is moving up, once again, you have liquidity engineered and grab over here, right? Range manipulation, very, very straightforward. As price is being delivered as such on the way up, what we want to see is the algorithm change or switch from buying to selling. And that we're going to be identifying that by being able to monitor lows, that break, bearish order flow starting to hold. And as that sequence develops, once again, keeping in mind where we are on the higher time frame, this is your key, right? Especially monitoring for key level reactions, you're going to be in a very good position to open a trade and be profitable, right? Not saying that it's going to drop forever, not saying that price needs to now make a new lower low on a higher time frame, just simply expecting to have a positive outcome as price turns around and starts dropping, right? That was the expectation, the whole trade, the whole idea. Just to give you a little bit more context, that this was indeed sent out to everybody. This is where the entry was taken, right over there at the rejection of the key level, and we're gonna be zooming into that right over here, so don't worry. So this is the trade. It is very, very simple. Once again, price trades into your high time frame area, breaks order flow over here, comes back, mitigates bearish flow, breaks again, right? At this point, you have to be looking for sells, because once again, you are within that higher time frame narrative where you are already expecting price to turn. You have now lower time frame price action confirmation right over here, right, telling you that the algorithm is now switching into a little bit of more selling, right? There's no longer buying occurring. We've done that over here. We're now moving into selling very cleanly, respecting bearish order flow and starting to deliver lower. Now, some of you may be confused, right? Where is your entry? Well, I don't have a problem going through that. Once again, you look at the timer to the right. This was the live environment at this point, right? Look at this beautiful key level, 1786 flat. Look at the rejections over here, right? And look at the mitigation of this is your entire block. You can once again refine to potentially this segment. You can see that I have one above over here. You can potentially do the open over here. And as you can see, as price trades back and retraces right over here, I'm not expecting that we're going to be making a new higher high. Right? I'm not expecting that. Why? Because the algorithm and price delivery has already shown me that we have switched from buying to selling. This is so important that you get this idea straight and that you are able to understand this. The algorithm has now shifted from buying to selling, right? And you can see that in the way that the lower time frame order flow is being delivered to you. Right, this would be your external point of the ranges. You know that any high in between can be taken out, as this can be seen as internal range liquidity, which is something that I've covered in multiple videos already. So you cannot take a sell over here or maybe over here and not put your stop loss above the mitigation high, because you can expect that price can run any of these highs in between, right? That can very well happen. So your stop loss, if you want to be safe, right, has to be above the mitigation high right over here. If you put it over here because you want to be a cowboy, and you see this over here, then you're going to struggle, because you should aim to have a profitable trade. You should not aim to what's this, to have the best entry in terms of risk to reward. That's just nonsense that the industry unfortunately is really struggling with, I'd say. So you want to be the trader that's smart, and you want to aim for a profitable trade. And this is really where the entry was taken, right over there at the key level. Once you start seeing the rejections, if you're not comfortable, because once again, price could have very well gone through this section over here. So, sorry, this section over here. So once you start seeing the rejections that we're not closing above this area, you can maybe wait for this low to break. And as it breaks, you can execute your sell over here. Once again, your stop loss should be over here. Please do not debate with me. Yes, in this particular case, it could have been above the key level. It would have worked. But if you want to be long-term winning, it is much better if you place it above the mitigation high. Very, very crucial idea to keep in mind, right? So do not know if we have more pips. So this is sort of when I decided that, hey, you know what? I'm happy with what I have here. I don't need to stretch this any further. This is good enough for me, right? And we're going to be getting into that once again, because the price did drop a lot more. But was I confused? Was I mad because I didn't capture the entire move? Absolutely not, right? I cannot predict where price is exactly going to drop. I can have an idea, I can have an area where I believe price is likely to turn, but I'm not the algorithm. I don't have that information, right? So I just have to work with the information that's given to me. And once again, apart from the higher time frame narrative, which we just went through, look at your daily cycle as well for confluence. Beautiful Asian range manipulation, right? Which has been happening pretty much day in and day out for some time now on gold. If you go through that, you will see that both pools get manipulated to the T. And if you go through GJ in the interest rate decision, you will see that as well. Beautiful grab above the high, drops. Why? Because the algorithm is looking at areas of this for liquidity, right? So once again, look at this grab below the range, mitigates the FU, moves up, grabs the Asian high. Great, daily cycle completed. Now, your high time frame narrative dictates that this is a good area to do business at. This is a good area to be looking for shorts, right? You're not blindly selling here. You're looking for order flow confirmation, which you get right over here. So as price retraces, you're going to be a man of strength and power, and you're not going to struggle to execute once you get a rejection or a low break in right over here at your key level, right? Which in this case I had as 1786 and 1790, which never got tapped, right? So with that being said, I think this is the trade. I'm unsure whether there is more information. Well, this is sort of the end result. You can see that price did drop quite a bit after that. I took profits, roughly 100 pips. I think it was somewhere within this region, and price did drop even further. But that's just the nature of the business. Once again, you're not aiming to get out at the very low, right? You're not aiming to get out at the very high or to enter at the very high. You're aiming for a profitable trade. That's all you're aiming for, guys. This is really not difficult when you break it down to that idea. You're aiming for a profitable trade. Why? Because every trade is individual and discrete in nature. So whether you capture 30% of the opportunity, 50% of the opportunity, or 100% of the opportunity, it is still a profitable trade, right? And the very next trade that you take has absolutely nothing to do with the previous one, right? You're not going to win just because you took a loss. You're not going to lose just because you took a win, right? This is not how the market works. You need to get that idea out of your head as soon as possible. The market doesn't care who you are. The market doesn't care about your lot size or account size or any of that stuff, really, right? So, yeah, I didn't mean to rant so much on psychology, I guess, but it really fires me up when I see the very same issues popping up, right? you have to understand and you have to learn to separate the trades, right? This is one trade. This is trade number 2, 3, 4. They have absolutely nothing in common. They are discrete in nature. Every market scenario that's presented to you is unique. Okay, so with all that being said, guys, don't want to make this too long. We're going to be quickly jumping back into the charts, going once again over the mitigation with the candles, and then we're going to be wrapping and summarizing this video up. So give me a second over here. I will pause the recording, and I will see you guys in the charts once again. Okay, guys, so very quickly, we're going to be going through this. Just to give you a little bit of a context, once again, this was today the NFP candle. We did the trade above my POI, so I was not looking for anything in particular. I was more so waiting for a tap into my key level, which was 1800 flat, which unfortunately we never got, so I didn't do anything with that. But what I did do is trade this move over here, which once again dropped over 300 pips. So moving into the 1 minute time frame, we can probably go through this information once more, right? So in terms of the POI selection, we had a weekly block rejection, which I shared with everybody as well. We had this POI over here, which people in the mentorship know a little bit of more information in terms of what this really is and how to trade it. And then we had this retracement leg building up into that area. So we moved into that daily cycle. Once again, you can see the previous days was beautiful manipulation, one side, two side. One side over here only. Well, maybe if we zoom into the lower time frame, as you can see, right? One side, two sides, one side, two side manipulation, and this very day happened the very same thing. Next day again, the previous 2 days it has not happened, but it happens more often than not, right? It's never going to be 100% because otherwise it would be everybody would be a millionaire, right? So moving into that, we have that key level take place. We zoom into the order flow, which we've already briefly discussed, and this is what you get, right? Once again, manipulation, liquidity sweep, mitigation high, break below the low, first order flow break, retracement, structure point, moves down, breaks more layers of order flow. At this point, you have to be looking for sells. So as price retraces, you can see that it lines up with the key level. You start seeing rejections. You know that you can sell with your stop loss above this high, and you're looking to take price lower. Where can you target? Well, obviously you have areas, lows, where you're going to be looking to see what price does, right? Those are your areas of interest. So as I said before, I think this is going to conclude today's lesson. It was a pretty powerful one, if I do say so myself. So I really hope you guys enjoyed it. Now, thank you very much for listening. If you made it to the entire video, I appreciate you. And yeah, with all that being said, guys, I will talk to you guys very soon. Take care, everybody. And I'll see you guys very soon. Bye bye.